Well, hello there and welcome everyone to the Advisor's Edge podcast. I'm your host, Rob Jacoman, and we are super honored and grateful that we have an amazing lineup today of two incredible guests. But before we get to our guest and make the introduction, I just want to say hello to my co-host, Chad Ramberg. Chad, how are you doing today?
Rob, it's good. We might have snow on the way in the Northwest here. Hopefully the rest of the country's staying warm.
Yeah, it's warming up here where we are up in the Northeast. So that's a good thing. So no more sub-zero degree temperatures. But listen, guys, we have an amazing lineup today. And it's, again, the purpose of our show is to bring you the best of the best, the top people in this industry who can share their insights, their value, and really add value to your business and your life in some way. And I know these two guys right here that we have on today are just filled with knowledge and information and are going to tell a great story. So we have Steve Zeiger and Barry Flagg on our show today. So I will kick it off to Chad to do a formal introduction of how you guys know each other. You guys have a great story to tell, and we want people to hear your story. But most importantly, also all the things that the value you guys can share that's really going to contribute to making this industry even better and better. So we're honored to have you guys on.
I'm so glad you guys chose to join us today. And one of the things I want to get out of the way is the elephant in the room, which is funny. We're in the insurance industry. KB Financial's in the insurance industry. Fox Professionals in the insurance industry. We're technically, I think, both brokers, or we're getting coverage placed at some level, but it's expertise and helping educate our clients. And so why in the world would we both be on the same podcast? And really what it is, even though we're both insurance, we're doing something completely different. And we want to help our clients, financial advisors that work in the industry space, have good resources. And that's what makes me so excited to have Steve on. Now, Barry and Steve have worked together a lot. And so we've got a deep level of domain knowledge here. And we may go, for those of you advisors that are CFPs and really detailed, really high quality, I think you're really going to enjoy the conversation, because every time I talk with Steve and or Barry, I learn something new. So thank you guys for being here. Let's dive in. Yeah.
Perfect.
Yeah. So
Perfect. Chad and Rob, thanks for having us on today. We look forward to this. The first time I watched one of your podcasts, I was like, Barry, we got to meet these guys. Thanks for moving it along.
Awesome. Can't wait. Let's dive in.
Yeah. So professional journey for Steve. Give us a quick KB Financial. You have deep expertise in life insurance, financial advising, all of that. Tell us a little bit about what got you here.
Sure. So I wanted to be an entrepreneur. When I was a kid, I had a car waxing business, and I decided to go into the financial services business because I liked helping people. I like finance, and I settled in the life insurance industry, not really knowing that its reputation was poor. Really, I quickly learned, everyone was frustrated that there were lack of transparency in all of the transactions. They were worried that they couldn't figure out what was going to help their clients have a better outcome. They just found it to be a frustrating experience with lots of conflicts of interest. And I'm into data. My dad was an analyst. I had that analytical mind. And the information I was getting from the insurance companies really wasn't what I wanted. And one day, through happenstance, I was actually introduced to Veralytic.
One day a long time ago.
Yeah, one day a long time ago, right? And I gave them some information. A few days later, not sales propaganda, but empirical evidence showed up in my inbox. And I called back and I said, hey, how do I use this stuff? And they said, well, I quickly heard this was like the Morning Star, but for life insurance. I said, sign me up. I signed up, I subscribed. A couple of days later, I submitted all this information to the insurance company that I worked for, Mass Mutual. And they said, sorry, buddy, you can't use this. I said, what do you mean? I said, I have a letter from FINRA, and FINRA said this is the only methodology that complies with FINRA regulations to compare life insurance policies to a benchmark. And the person at the insurance company said, well, your goal is to sell as much of our stuff as possible, not really what's best for the client. And I said, oh, that's fine, whatever. How can I use this? And they said, you can quit your job and use it, or you can stay here and you can't. And I shook his hand and I quit. And from there, it's been a phenomenal experience because every insurance agent wants to be on a podcast like this, but they can't because what they have isn't unique. And this is unique. And it's gotten us to speak with you guys today. We got to speak at the American Bar Association. Barry and I spoke at the American Bankers Association. We've spoken at 100 industry organizations because people want to hear the truth. They want empirical evidence. They don't want more sales spiel. And that's a pretty quick story, and hopefully it answers your question.
Well, it does help. And it also tees us up to chat with Barry here and tell us a little bit about Veralytic. So you are with Veralytic, and it's because of that domain knowledge that brought you here. And I think Steve was really smart to make sure you're part of the conversation. Tell us a little bit about what got you to Veralytic and put us here.
So I started as a 19-year-old. I was in the financial services business while I was in school. I was a junior analyst in a financial planning firm. I had Morningstar. It was easy to use. I graduate from college, go to work for an insurance agency to broaden my experience and expand my resume. And there I was told, well, there's nothing like Morningstar for life insurance. So all we do is we compare one hypothetical projection that's never to come true to another hypothetical projection that's never to come true. And we call that due diligence. And I'm like, that doesn't really sound like due diligence to me, but okay. Fast forward a number of years, I was like, somebody's going to invent Morningstar for life insurance. And I was 37 years old. And for all the 37-year-old listeners you have listening today, you know that a 37-year-old man can do anything because we're full of testosterone. And that was during the .com boom when capital was being thrown around like crazy. And so they're throwing money around, and I'm 37 and I can do anything. So I applied for the first of our patents, was awarded the first of our patents faster than Amazon was getting patents. Not because I'm smarter, just because it was, as Steve said, it's completely unique. The United States government doesn't give you a monopoly unless it didn't exist. So we got our patent in 9 months, went online in 2003. And Steve Zeiger was about the only one who cared at the time. Bernie Madoff was sending out pieces of paper that everybody thought was fine. And so it was an uphill battle early on to charge a fee for, just like Morningstar charges a fee, we charge a fee for access to our database, for access to our research. It's a bit of an uphill battle when nobody cared about Bernie Madoff and everybody thought all the insurance companies were fine. And fast forward a decade or so, and things change. Insurance companies go out of business, or at least go through rehabilitation. The financial crisis kind of changed the trajectory of our growth. And we still don't have enough customers, but Steve was one of our first and one of our most experienced.
And
That's awesome.
And Rob, I know you're in charge of the questions, but I have a question for you guys. So Imagine this. Imagine you needed some insurance and somebody ran an illustration for you and they said, hey, Rob and Chad, here's this 80-page illustration. There are 70 rows of numbers. There are 12 columns. And then they said, by the way, here's this other one. It's 92 pages. And you have to compare those and sign an attestation that you understand what's going on, right? Do you think you'd be able to figure that out?
I think it's a little bit like that little questionnaire I get when I get a new phone that says, hey, you understand and you agree to. Or maybe it's like an insurance contract when I go buy my E&O.
So now imagine we took those two illustrations, we emailed them to Veralytic. 2 days later,
or less,
a one-page summary with pictures and line graphs and bar charts that will tell you exactly what you're looking at. And that's really the beauty of this, that we don't need to go to sales school. We just need to go to school and learn how to decipher the data. And for a business that's filled with conflicts of interest and lack of transparency, this is a phenomenal day for your listeners.
Steve, can we dive deeper into that real quick? Because I think I know I'm asking the questions, so I'm in charge. I'm kidding. So let's go deeper into that. So that's a great segue into the next question I would have is, okay, That's great. I agree with you, by the way. Transparency is a major problem in the insurance industry. I've been doing this a long time, and it's one of the things that insureds talk about all the time is, why isn't there more transparency in this industry? Why aren't there more options? Why don't I have more control over the marketplace and the choices that I have and the decisions I have? So that's a big thing. I teach that to brokers and agents all the time. But my question is, what is the practical application of that for the end user? What is the value and benefit of describing that, exactly what you just described, for who your ideal customer profile is?
Sure. So I only work through attorneys, accountants, family offices, trust companies, asset managers. For whatever reason, I'm incompetent when I'm directly with the consumer, right?
Mm-hmm.
And I think it's about transparency, and I think it's about, imagine this. The client has a couple of buddies, or the prospect has a couple of buddies that he knows from his country club or he plays tennis with. And they all come to them with that 80 or 90 page illustration. And they all say to the client, mine's the best. But back to the question that you had mentioned, Rob, I think you have a son, you're about to get married. When you look at a wedding ring and the salesperson is telling you, here's the number of carats, here's the cuts, here's the clarity, right? You don't know if they're telling the truth, but luckily they hand you this brochure from the Gemological Institute of America. An independent third party tells you, here's the clarity, here's the number of carats, here's how big the black spots are. Same thing when you buy a car or a toaster oven. You go to JD Power, you go to Consumer Reports, and you can have an independent third party that said, this one burnt the toast all the time, this one makes perfect toast. And they don't sell toaster ovens, right? It's the same thing with Veralytic. We can take all the work that those other agents have done, or we can run the illustrations ourselves. We send them to Veralytic, and as Barry just said, in less than 48 hours, the report arrive back at my desk. I meet with the client, and the other agents, they're digging their heels in the sand, but they don't have the data for the fight. And the client and their attorney and their accountant and their family office and their trust company, they become addicted to the data. They say, hey, what about this? And I say, and I don't opine on that. I say, let's just run another report and see, are the costs higher? Is there undisclosed risk? How does everything compare to the industry benchmarks that Mr. Flagg invented? Is that a helpful picture?
100%. I'm sorry, Chad, I don't mean to step on your toes here, but I've always had the opinion that whoever owns the data and the information has the most power, because that's what the consumer or the client is looking for. And one of the things that I've been very critical in the insurance industry in general is the lack of access to data and information and full transparency. Because with that transparency comes the ability for someone to make their own decisions that are in their best interests, and it's not biased. It's not, it's not tainted by, well, sales, or I need to sell this product, or I need to have this thing. It's not swayed one way or the other, but it's very independent and it's objective. And that's the one criticism I have of this industry right now. If we can get this transparency out there and get information into the hands of the consumer to make the best decision for them, that's where we're going to empower people and really transform the industry. So I'm 100% on board with what you're saying. I'd love to go deeper into this and how, and what you guys are doing to transform this industry for what you're what you're creating here.
So I think it's all about education, right? So we talked about why do we spend our time educating the American Bar Association, Real Property Trust and Estate Group? Those guys, they don't sell insurance. It's all about education. We want them to ask the agents they work with, hey, could you get me some independent report? So they know about Veralytic and they can ask for it, or they can call us, right? It's all about education. I still remember the first time I called up Veralytic, and they were kind enough to spend some time educating me about their research. And then I carried it forward, right? Because they're busy building their databases, making sure their data is correct. And I'm out there in the marketplace. And that's why we educate CPAs, we educate attorneys, we educate RAs. And I don't know if you want this in the podcast. I'm just going to give you a funny story. I think it's actually a Barry Flagg story, right?
Let's hear it.
So,
Yeah, there we go.
Now you opened up the can of worms. We got to hear it.
So Barry is presenting something, and the agent on the other side of the table is saying, I would never sell that crap. Barry had the data to say to that person, do you know that your insurance company reinsures their business with the company I'm recommending? That guy looked like an idiot, and Barry looked like Einstein. Why? Because he had all of the data in the marketplace to make a better decision.
Yeah.
That's a really important no.
It is important.
The story away. Everybody froze.
We have
Did everybody freeze or just Steve?
Just Steve. That's okay. We wait. That's good. Perfect. Hold on 1 second.
He's back.
There we go. That's for my video editors.
Yeah. So here's what I would like. So we're a little bit like we're looking at the car from the outside. It's a good looking car. We pop open the hood of our brand new Corvette. We don't need to know how it works exactly, the specifics of the engine, but we love to see that the engine's there and that it can purr and what it's doing for us, right? Barry, from that perspective, can you give us a view of some of this work that's happening underneath the hood that Veralytic brings to KB Financial so they can do such a great job?
Yeah, and I'll actually tie this to CFPs too. I think I heard you say earlier that you guys have a lot of CFP listeners. So if you're buying a new Corvette, there are rules around what there are lemon laws. There are rules that say that there is an implied amount of quality, because no buyer of a Corvette or any car is going to understand how all the engine works and how everything's worked. Right? So there's consumer protections, lemon laws, what have you, when you're buying a car. A CFP is now subject to similar consumer protections. The CFP board updated their practice standards a couple of years ago. Used to be that you were a fiduciary. You could lose your CFP if you didn't serve the client's best interest when you were doing a financial plan. But it used to be that you could take that fiduciary hat off when you were doing the implementation of the plan. And they changed that. And so now whenever a CFP is talking to a client, they could lose their CFP designation if they don't have their client's best interest front and center. And client's best interest is not just a three-word term in a cocktail conversation. It has legal meaning. And from a financial instrument perspective, that legal meaning is that costs need to be justified, performance needs to be reasonable to expect, and risks need to be appropriate to the client's risk tolerance. That's the new CFP practice standards. So let's come back to the car. There are two different regulatory regimes when it comes to CFPs and insurance. In the insurance world, the insurance regulatory regime is the National Association of Insurance Commissioners. Illustrations model regulation is what governs the output that the insurance industry gives to the CFP. And those regulations permit agents, brokers, or insurers to quote a low premium. So that they're going to make the car sound like it's purring. Back to your Corvette analogy. Those regs permit the agent, broker, or insurance company to quote a low premium, giving the appearance of low costs, or project this fantastic growth of the account, again, giving the appearance of low costs, while they're actually charging high costs without disclosing either the high costs or the higher risks of the insurance company coming back and asking for more money later to cover the high costs, or even total loss of the account due to policy lapse because of these risks. That's what the insurance industry regulatory regime is. That is diametrically opposed to the CFP practice standards. So if you're working with an insurance professional and you get, as Steve says, these 80 or 90 page documents, a CFP should have considerable skepticism when it comes to those 80 or 90 page documents and go through them very carefully, which takes a couple of hours, or get a Veralytic report or call Steve.
Yeah.
Can I go down a rabbit hole here?
Yeah.
You guys mind? All right. This is my Rob as a former agency owner and producer in my insurance career, middle market space, spending a lot of time, obviously not in the same world that you guys are in. Here's my thing, but understanding, Barry, you triggered me a little bit with you're talking about.
I get that a lot.
Well, with regard to the insurance regime, now I'm on a personal mission to decommoditize the insurance industry. And here's where I'm going with this. And this ties into what you guys are talking about. I believe that this is all by design, that it's all by design to be in control of the marketplace. And I could be called a conspiracy theorist, but I truly believe it's top down. It's not bottom up. That's how the control works in the insurance industry. It's not always in the best interest of the client or the product.
No. Let me. In fact, I want to make that very point. The insurance industry for the past 5 years has been actively and vigorously fighting against clients' best interests. So it's not that it's not always, and it is. They are actively fighting against clients' best interests. They fought for 5 years against the New York Department of Financial Services when they were trying to issue a best interest rule in New York. They eventually lost. They most recently lobbied against a best interest rule for insurance, working its way through the California Senate, made it all the way through committee. It was about to be voted on, and the industry lobbied against it and torpedoed it, and then claimed victory for winning the battle against clients' best interests. So,
wow.
Sorry you triggered me, but
no, this is the
they
whole
are
point.
actively fighting against clients' best interests.
This is the whole point of the show. Now, Steve, where I want to rope you in, this is what I believe. And I can share my personal opinion because it's our show. And I don't have any qualms about this whatsoever and sharing this openly because people know at least where I stand. I believe that the bar in the industry is way too low. The bar is very low for getting your license and all this other stuff. And you can get CIC, ABC 123, all these designations, all these certifications, but it doesn't mean anything if you're not truly a specialist in this industry. And that's what I believe. I believe that if the industry is going to move in the right direction, we raise the bar of what the standards are and the certifications and help create specialists in this industry who are the best at what they do. And so there is that test, that higher bar to achieve. Now, what I say, this is my question for you, Steve. I do have a question here. That being what I personally believe, I believe what you're talking about in what you shared a little while ago, because I want to go back to it, is if we actually had higher standards and had experts and specialists in very specific areas like what you're talking about, we would eliminate a lot of this lack of transparency, lack of knowledge. And because here's the thing, you take a guy that's presenting to a client this 80-page document, how qualified is that individual? Did they just get their license yesterday? Did they just take their test yesterday and now they're testing the market and just making connections with all the guys at the country club, or they're going through their family list of all these people I want to connect with and sell to? Or are they truly the best of the best at this one thing and do it better and world-class more than anybody else?
Can I interject something really quick?
Yes.
Before Steve answers. So even a CFP for 20 years, the overwhelming majority of them, I am the youngest, the now oldest, youngest CFP in the history of the College of Financial Planning. I've been around the CFP community a long time. They overwhelmingly rely on insurance agencies for their information and for their product recommendations. So those agencies are putting even experienced CFPs in harm's way.
I love that we're getting so passionate answers here. This is good.
This is something I'm very convicted about, and I believe is the answer to a lot of the commoditization in this industry. And I know that sounds like a fancy terminology, but basically we're dealing with a bunch of generalists who don't have data. They don't have information. They're not experts in anything, and they're not specialists. And they're selling a bunch of stuff that they don't understand. They don't know. They don't know the industries they're selling into. They don't know the client. They don't understand what their needs, their desires, their problems and challenges are. And I think what you guys are bringing to the table is you're marrying the data, the knowledge, the expertise, and you're bringing it together as something that you can present that's a world-class solution and solves a big problem.
So how do you do that, Steve?
Well, so where they studied successful companies, I think chapter 1 was called Stick to the Knitting. Do what you do best. And I think that this business is a confusing business. But if we look at other businesses, Rob, other businesses are run the exact same way you're talking about. So imagine you walked into the doctor, your primary care physician, took your cholesterol's a little high, and he said, Rob, I'm your primary care physician, and I'm your cardiologist, and I'm your neurologist, and I'm your phlebotomist, and I'm your ortho. You'd say, no, I want to see the best guy for my back. I want to see the best woman for my mind, right? It's the same thing here. As Barry said, many people get their information from these sort of brokerage general agents where they're more of processors. They're not experts. And many RAs, family offices, CFPs, they've started to use this model. They call us up. Why? Because they become addicted to the research. And after they see it once, they're never going back to the other way. But we have a bit of a fight here. There are 350,000 licensed insurance agents, and they're telling another story, and that story doesn't really hold water. But you can see by those authorities, the American Bar Association, the American Bankers Association, NAPEC, ACTEC, those places are all about education. And that's why they had us speak, because we're delivering empirical evidence. And it's based on, as Barry said, communications from the CFP board, communications from New York State Department of Financial Services, delivered by the Department of Treasury, the Office of the Comptroller of the Currency, delivered by the Society of Actuaries, delivered by adjudicated lawsuits. That's where it needs to come from. Is that helpful?
Amen. I'm with you. We could talk about this all day long because it's something I'm very passionate about. I believe that expertise, that specialty knowledge, I think that's the answer to a lot of the, if you look at the bigger industry as a whole, what's driving claims? Well, I would argue that what's driving claims is a lot of uneducated agents who aren't really adding value to the insured's business or to their personal life because they don't understand what the unique risks and exposures are of that industry or of that person's current situation. So I think you go to the micro level and you look at it even at that level. I think you guys are onto something. I think I'm onto something too. And I think it's resonating. This message is resonating with professionals who get it, who understand completely. This is where the industry should be going.
Yeah. So to me, this looks, the insurance industry of today looks a lot like the investment business did in the 1970s, 80s. Mm-hmm. There used to be a profession called stockbroker. Does anybody have a stockbroker anymore? No, you have an investment manager, right? And the stockbroker used to place trades and and then you had the knuckleheads the knuckleheads of that day placing penny stocks and churning the accountant, and all of that changed when there was this movement toward information. Morningstar came out in the 80s, movement toward information and management, data and management. So that was the 1980s. That investment management business is rather mature. Margins aren't what they once were. And CFPs who are in the investment business, I'm not suggesting for a minute that you get out of the investment business, but that story in the mid 1980s, when some of the largest RIAs on earth were born, all they did was go to clients and say, do you know what you're being charged in your pension plan? You know, there's this law that says you have to know. Do you know? No, I don't know. Well, then let us get you a Morningstar report and let's figure out if you're being charged fairly. And more often than not, when the report came back, if the costs were high, the business owner would say, well, wait a minute. I got the largest account balance in the entire plan, so I'm getting charged more than anybody else. Can you help me with that? And the answer was almost always yes. And that was the way RIAs built themselves, by gathering assets, asking nothing more than, do you know what you're being charged? Answering that question and gathering assets. Steve is proof, living, breathing proof that business model works for insurance too. All he does is walk around to CPAs, tax attorneys, trust officers, financial planners, CFPs, and say, does your client know what they're being charged? And the answer is always no, almost always no. Would you like to? There's an 80% variance between good and bad pricing. Would you like to know? Everybody wants to know. You get a Veralytic report. Sometimes the Veralytic report comes back 5 stars and the guys, thank you so much. And it's awesome when that's the first experience, because then the guy goes, oh, I finally found somebody who's not trying to sell me another life insurance policy. When it comes back, half of the insurance companies charge more than the other half. The law of averages says that, not me, right? The half charge more than the other half. So when you come back with a 2-star policy, the guy says, well, can you help me? It is the same proven business model, proven for 4 decades, that RIAs have been using to gather assets. Here's a new asset type that you can gather and help your client.
Man. Yes. Yeah, this is great. Steve, with KB Financial, when you're helping P, let's say, and you explain them how you go through that process versus if they're helping them with their assets under management, can you tell us about what that looks like so we can wrap our heads around that?
Sure. I think it's really about talking about the parallels between what the CFP does when they analyze every other asset and what we do when we help them analyze life insurance. So let's talk about what they do. They can get independent research from Morningstar, from Ibbotson, from Value Line, from Lipper. We can get independent research from Veralytic, The Ethical Edge, Zinnia, and Morningstar. They can run Monte Carlo simulations, and there are independent third parties that run Monte Carlo simulations on life insurance. And then they benchmark the performance of whatever asset it is. They look at the performance of whatever asset it is and compare it to the industry benchmarks, which is exactly what Veralytic does. So now when we're meeting with the CFP, they say, wait a minute, you guys are treating life insurance the same way we treat every other asset. We're actually kindred spirits, where most people sometimes see that, well, wait a minute, we've always been looked at as enemies. $1 wasted on insurance is $1 that they can't manage. And now they see, wait a minute, we've met a kindred spirit here. Let's dig deeper. And the deeper they dig, the more they like.
Mm-hmm. Amazing.
And the more they find new AUM. Because again, if half of the insurance companies are charging more than the other half, if you come across a client with a policy that has high costs and some real life situations, now these are big ones, but real life situations, a customer ran a Veralytic report on I think it was a $12 million policy. The costs were $5 million higher than necessary. Sorry, it was a $25 million policy, $12 million in cash value, but the costs were $5 million higher than it needed to be. So you didn't need $12 million in the account to cover all future costs. You only needed 7. And so what did the investment manager get? Because the investment manager ran a Veralytic report, he found $5 million of AUM.
Wow.
Does anyone understand? I think it's worth repeating. Those are the kinds of stories that we need to hear more of. That's called transparency. And I think the message that you guys are sending to the marketplace here is, and I think this is also the problem in the industry. I want to hear what you guys have to say about this. I think the industry did it to themselves for a long time because it became a price play. It became about shopping around, shopping your insurance, as opposed to running a very sophisticated, let's run the numbers, let's run the data, and let's understand our customer really well so that we can custom tailor a solution for them. And I think for the longest time, it's always been like this cookie cutter commoditized approach. Even in personal lines, it's like that. But I think that's the problem. And then the consumer thinks that they see a commercial on TV that says, you want to save 15% on your car insurance. And so it's the mentality of price and shopping around. Whereas that's not really the way we want people shopping for insurance. We want a different model. And I think what you guys are bringing to the table is a different way of thinking, number one, and a different model that better suits the customer versus what's in the best interest of the agent.
Can I tell you a quick story?
Yes.
I think it really answers and speaks about what you're talking about. So a couple of months ago, I got a call from an attorney, and the attorney he's addicted to the research. He called us up and he says, "Hey, Steve, we have a client and his brother-in-law is recommending a policy where he's going to borrow $560,000 a year from a bank. He's going to take the $560,000 that he gets from the bank. He's going to deposit it in a life insurance policy. And then approximately 20 years later, when the bank loan has grown to $14 million, he's going to take $14 million out of the policy using a loan and pay back the bank." And the illustration ran until age 120. And the attorney said to me, "Look, my goal is to protect the client. The brother-in-law is the agent. They're not going to do any business with you. But that doesn't matter. What matters is protect my client." So we ran the Veralytic report. We ran the Monte Carlo report. And then now we're suddenly sitting in front of the client, the prospect, even though he wasn't a prospect because it's going to his brother-in-law. We showed him the Veralytic research, which said that the policy was expensive. And we also showed him the Monte Carlo simulation that showed him that there was an 84% chance that this policy would not last until age 100. Okay. And then he said to me, "Steve, I'm getting together with my brother-in-law for Thanksgiving.
Oh boy.
Does he know that? Does he know this?" And I said, "Look, maybe there's a 1% chance that he knows this, but there's a 100% chance of this fact. The insurance company doesn't give the tools to prove or disprove their product." And that's what we bring to the table, those tools. And can we just have a little house cleaning for one moment with the listeners?
Yes, please.
Just if anyone has any questions, we're going to show our contact information at the end. Just if you'd like to get together, just text us the letter M. We know that means you'd like to have a meeting. We know it doesn't mean we're going to do business together. Just want to learn more. If you think there's someone in your network who you think should see this podcast or have a conversation with Barry or myself, just text us the letter network. We'll know what that means. If you want a copy of our Trust in the States article on the Cochran case, which was the first adjudicated lawsuit regarding a life insurance policy owned by a trust, just text us the word article. And if you'd like a sample report, again, just text us report. We're happy to send it to you and let you open the onion and dig deeper and learn all the layers of what's actually going on. Hopefully that's helpful to everyone. And that's really the 1 minute of sales that you get here. Everything else is really empirical evidence and facts.
It's great. I love it. I love the CTA. I call it a CTA. It's a call to action. Right. If this resonates with you and this makes sense to you and the things that we're talking about come through, then take action. Don't just sit back and say, "Wow, that was really great information," but actually take action, take control. And especially if this resonates with you. And I think it's the mistrust in the industry in general and the lack of transparency that has caused a lot of this stuff that we're talking about today. And I just think, here's my question for you, Steve. If what you're saying and offering is the right solution that can solve a very specific problem for the industry, then why are we not training more agents on this process? Why wouldn't we bring guys and gals in and learn your system and your process for how you're doing this? Is that one of your missions?
It is, but unfortunately, there are some sort of systemic problems in the business. Like Barry mentioned many years ago, when you bought an investment, you called up AIM, and the AIM person showed up and sold you an AIM fund. Well, now that AIM person no longer exists, right? Now you can go to they can give you a menu of everything in the marketplace. But the life insurance business is still that old model. Someone calls up the Guardian or the Mass Mutual or the Northwest Mutual. They're just like if you call up the Xerox person, you're going to be buying a Xerox machine. They're never going to tell you that the Ricoh is a better product. So that's the first systemic problem. Just like when I worked at Mass Mutual, they're a great company, but they need a high percentage of their agents and employees' sales to be with Mass Mutual, or their model falls apart. So they can't use the research. And then there are many institutions, banks and wirehouses, for example, where they have a limited scope. You can sell any insurance as long as it's with these 7 companies.
Exactly.
Well, what happens when the best company is the 8th company, according to Veralytic? Now they can't use it. So there are many impediments to people actually using the research. But again, our goal is for the client to have a better outcome. That's why in every circumstance, we tell the attorney, the accountant, the RA, the trust officer, the CFP, regardless of whether you're going to do business with us, get the report.
Yeah,
With the
100%.
report, drive your client towards a better outcome, right? That's really what's going on. And that's why this is a battle that at the moment is impossible to win, because if you're a career agent, you get your medical plan, your dental plan, your 401k plan, your parking space, your secretary, et cetera, paid for by that insurance company if you hit your quota. And Veralytic says, hey, on this particular case, that company is the best one. And then they lose all those rewards. So it's an insurmountable problem at the moment. But
well, it's definitely an uphill battle at an industry level. It's going to take some changes to the state regulation. It's going to take more than New York. My understanding of the California law that was passed is it's only 18 months, and then they're going to revisit the whole life insurance thing, I think. It's going to take more regulation for an industry-wide change. However, again, Steve is walking, talking proof that while the masses are doing it in a way that is not in the client's best interest, at least not legally, and many times not practically, it is a golden opportunity to differentiate yourself. And if you can, so think about it this way, if you approach a prospect and you can ask them a question that no one else, none of your competitors, almost none of your competitors can answer that question, much to my chagrin, because if everybody could answer the question, they'd all be Veralytical advisors, Veralytic customers, right? But so far, we have a lot of the industry fighting against, and they're not customers. And so if you, as a CFP or an RIA or a financial advisor, if you could ask just one question and you knew almost no one else knows the answer to that question and you knew how to answer it, that's a competitive advantage. Steve is a walking, talking example of that because of his success.
It's amazing. You guys know what I speak about every day, right? This is exactly what I'm talking about. This has been my next iteration of my journey in my career, is to help agents differentiate themselves from everybody else in the marketplace by becoming industry niche specialists. If you become a specialist, and like you said just now, Barry, if you're the one that's asking the question that no one else is asking of a business owner, then it automatically differentiates you from everybody else. It puts you in a whole different category of, call it authority or expertise, but you're asking those questions versus like what a generalist might ask. Hey, can I get copies of your policies? Well, that's the dumbest question to ask, because everyone else is asking that question. So I'm 100% with you guys on this mission and on this journey of really helping to transform the industry and the way people look at an agent, and really training the future of the industry to become specialists in their craft and become like artisans. Become an artisan of your craft and learn it inside and out.
right.
There's actually a 1-2 punch there too. And Steve has had this experience and can tell you a story, I'm sure. So the first punch in my 1-2 punch analogy, it's not really a punch, but the first thing you can do to differentiate yourself is ask Do you know what you're being charged inside your life insurance? So that was the one we just talked about. Now the other agent is going to say, well, I can tell you that too. And he's going to give him a hypothetical quote. And Steve is, and I've actually had customers of mine call me up and say, hey, your Veralytic report's wrong. I say, what do you mean? They say, well, the wholesaler for XYZ insurance company was just in here, and they just showed me a spreadsheet that had the lowest premiums on the chart. And so I went into their document and showed our customer that the insurance company was doing what the rules allow them to do, what these NAIC illustrations, model regs, they can quote a low premium, giving the appearance of low cost while actually charging high cost. So the first question is, do you know what you're being charged? When whoever it is that you're competing against comes back with some quote, some hypothetical quote, you go to the back pages and you show the customer, you show the client, okay, here's what the charge actually is. Here's what the rate of return is to get that premium that you think you're going to get, and it's 15%. And the client goes, well, wait a minute. This guy never told me that. So you get in the door with, what am I being charged? And you kick everybody else out by answering questions they try to answer and can't.
And if someone's uncomfortable having that conversation the first time about costs, you can even make it even more simple. Mr. Client, do you review your investment performance with Morningstar? When you last time you bought an electronic product, did you look at a consumer report? Did you look at JD Power when you purchased your car? Those are all independent research. Yep. For your life insurance. Shouldn't we do the same thing that you're already doing in other areas? Right? It's such an easy conversation to have. And the next time you can experiment and say, okay, let's talk about the costs, because you don't know what rabbit hole that's going to take you down that you might not have the answer. But here, you win every time, right? Anyway,
it's the best thing for the client. Yeah. So how can you lose when it's the best thing for the client? Because that's the virtuous cycle we're all looking for.
I think we're going to continue this conversation, because I don't think this is going anywhere anytime. I don't think this is going away, because I think this is my job is to provide a contrarian view of what everybody else is drinking the Kool-Aid or following the bouncing ball. I want to be that guy that says, well, wait a minute, you're just taking somebody's word for it, or you're just agreeing to it because that's what everybody else is talking about. Whereas I'm like, well, wait a minute. Have you ever looked at it this way? Have you ever considered this? And have you looked at the data? Because the data can tell a very different story versus propaganda or marketing or that kind of nonsense that we're all inundated with every day. Who are you supposed to believe? So I think what you guys are doing is you're bringing transparency to the forefront. And really, that to me is the way we can elevate the industry and earn the kind of respect and value as other professions in the trusted advisor industry. No one trusts an insurance agent anymore. And this is the very reason, what you were bringing up, it's the very reason. It's the lack of transparency. If these guys want to get respect and earn that respect, then be fully transparent and have the client's best interest in mind. That's what I'd say to any young producer right now. I'd say, you want to win in this industry, you have integrity, you have honesty, and your full transparency, and you're going to win.
Rob, if you think about high net worth and ultra high net worth individuals, they're advised by a fiduciary attorney, a fiduciary accountant, a fiduciary RIA investment advisor, and a fiduciary trustee. And you can ask those 300,000 insurance agents, hey, tell me some fiduciary words. And I'd say maybe 10 of them are going to be able to come up with the care, skill, prudence, diligence, right? That's part of the problem also. People want to the insurance person wants to be at the table with the attorney, the accountant, the family office, the trust company, et cetera, but they don't even know how to speak the language. And once you start speaking the language, then people knock down your door because you're different than the other 300. It's back to your differentiation. And you might want to delete this from the podcast. This is just an interesting, this picture of exactly what you're speaking about. So one day I go to visit an individual with his attorney. We walk into the client's office. The attorney, they hug each other. He says, thanks for the opera tickets or whatever. I go to shake the person's hand and he says, I'm not shaking your hand. I said, how come? He goes, I don't trust any insurance agents. And I said, oh, you're probably right. And he said to me, that's interesting. Whenever I say I'm not going to shake an insurance person's hand because I don't trust them, they say to me, but don't trust anyone else, but you can trust me. He said, you're the only person who's ever said don't trust anyone. So I said, let me explain to you what we're going to do today. I'm going to walk you through someone else's Veralytic research. I'm going to show you how to read the tea leaves. And then when it comes time to review your Veralytic reports, I'm actually going to leave this conference room and I'm going to go hang out in your waiting room because you've got the coolest saltwater fish tank I've ever seen in my life. Right? And that's the power of the research, because the research is all data driven and it can't be influenced by Veralytic. It can't be influenced by me. And the people notice, hey, this isn't Zeiger's really not using any salesmanship here. He's walking me through some bar charts, some line graphs. They like it. And then what about this? What about that? How come my agent didn't tell me that there were these costs inside? We had a thing a couple of days ago. It was pretty interesting. An individual is spending $300,000 a year on a life insurance policy. And it's a commission-free policy. There's no commission. So he meets me through his CFP RIA. And he said, well, we don't need to talk. Any policy you have starts off with a $300,000 charge that my policy doesn't have. And I said, well, that's really not correct. Your policy incurs, I'm going to make up a number, $18 million in cost of insurance charges, right? And as long as I can show you something that costs $17,700,000 or less, it's smarter to pay the commission to get the policy with the lower cost of insurance charges. Guess what happened? As Barry said, we saved him. He's got $8 million more cash at age 85, and I forgot the number of how much death benefit, right? So he learned. I thought the only expense was the commission. I go, the commission is the tiniest little, it's like somebody else once said that to me. And I said, hey, look, last time we spoke, you said you were buying a new car. I met this guy. He's the best negotiator at getting you the lowest cost windshield wipers on the car. You want to meet him? And the guy quickly realized the windshield wipers are going to cost $70. What about negotiating the other $80,000 that I'm spending on the car? And when people see the transparency, they see the truth. They have there are 5 areas of life insurance suitability. And every one of those areas is covered in a Veralytic research report, right? You have all of the data in the marketplace, or the agency that gives out the patents would have said, hey, young flag, this is errant, right?
Yeah, there's so many places we can go with this. Like, I'm fired up, actually. And I think we also need to do something in the industry. So anybody who might be listening, and by the way, I'm going to keep that in the podcast because I think it needs to be heard. I think we need to share our message and share the voice that we have, and to give people a different viewpoint that's not always drinking the whatever the Kool-Aid is of the month. We don't want to be always drinking out of that. But here's the other thing I want to take out of the industry. I think we should eliminate the word quote from the industry. Call it a dirty word and eliminate the Q word entirely and get people off of that whole mentality. I think we all serve ourselves a lot better by what other profession does that besides insurance? How many attorneys do you know that says, you know what, I'm going to get you a quote on that? Or, hey, does your CPA give you quotes on anything? But no one talks like, stop calling people trusted advisors. Call them risk architects. That was my title when I was producing. I didn't want to be called a producer. I want to be a risk architect. What does a risk architect do? I architect solutions to help better manage risk. That's how you're going to elevate the profession. So anyway, I don't want to go down that soapbox. I will let Chad Chad, it's time for us to bring it home.
No, what we've got is we like to end, and I think we're gonna have you guys back on. We're just gonna have to. This is too important, and there's too much to talk about here. But for today, I like us to because it helps us really understand you when we think about when you're looking back at a long life well lived. How do you want people to see you? What are they going to say about Barry? What are they going to say about Steve?
I think I would be happy if I was described after my days here are done as the father of life insurance research.
Wow. That's a unique.
That's awesome.
Yeah.
Learn a little more about that.
Cool.
Sorry to interrupt you, but that's really cool.
Yeah, I actually have two. One is I'm on the board of a cancer research nonprofit, and I'd like that to really change the world. And the second one is I help my clients have better outcomes. And how many clients do I have? A couple of hundred, a couple thousand. I haven't really counted. But when I see what goes on in the marketplace, I really want to make a difference for everyone, even if I'm not involved, right? Because people work hard, they have families. Why are they wasting their money on this stuff? All you need is this little research report. So my other thing is to change the insurance business to make it research-based, just like every other. I give another example to people. Imagine you went to the doctor and the doctor said, hey guy, just so you know, I don't work under that Hippocratic oath of first do no harm, right? You'd run out of the place as fast as you possibly could, right? It's the same thing here. Don't you want to work with somebody who works under a client's best interest definition? And that's due diligence. And the due diligence is go to Veralytic, get some independent research, and you'll have a better outcome. And that's the change I want to make in this industry that's paid my bills, put my kids through college, and protected me and protected all of you in case something ever happened to you. So like Barry, I want to change that industry.
I love this. Hey, you guys are amazing. And this is exactly why we bring guys like you on the show, is to share these insights. And I think what my biggest takeaway from all this is if we can all do our part to make the industry more transparent. And you remember how I started this show? Like when we had our little small talk before I press record, I said, let's think about as we're sharing some of our insights and sharing some of our value here on the show is let's think about our customers. Let's think about the end consumers. Let's think about those people in our messaging. And that's exactly what we accomplished today. So this is all coming full circle because you guys, whether you knew it instinctively or not, we're coming full circle. And what we're really talking about is we're talking about the people that benefit from the work that we do. And the people who are truly the consumers of the products and services that we can offer to the marketplace and making it all about them and what's in their best interest. And that's my vision for the industry. That's my passion and helping agents understand that. So guys, listen, again, we were so grateful to have you and hopefully you guys felt like you had a great experience here on the show.
It was fun.
It's good.
Awesome.
It was fun. You guys are fun. Yeah.
It's very different. It's a little unique, but listen, how can people, let's start with you, Steve. How can people reach out to you if they're interested in having a conversation with you? How can they learn more about you and KB Financial?
Sure. So I'll just attempt to share my screen. Rob, you said at the beginning that we were going to have fun together. So now it's time.
I'm going to give you my screen. There you go.
So now you had said at the beginning that we were going to have fun together today. So probably going to make fun of me that we're on a video, and on the video I have a picture of me. but
not at all. We'd never do that.
Here's my contact information, right? So you just send me a text to the 917 number, send me an email. Barry, if you want to put up yours, or if you just have a question for Barry, I'll forward the information. I'll forward your information straight to Barry so you can subscribe to Veralytic and help your clients have better outcomes.
Awesome. And you know what? We'll put all the notes in our show notes and descriptions so that we'll have the links in there so anybody can click on the link and reach out to these guys. And if you have a newsletter or whatever, we'll put all that in the show notes. And Barry, how can folks reach out to you and connect with you?
A disclaimer first. We've been working to help our customers like Steve and advisors use Veralytic research in their practice, and our website has been a little neglected, but it's being updated. So before you go to the website I'm about to give you, please don't judge a book by its cover. If you happen to hear this and go to the old website, which you'll probably know as soon as you see it, don't judge a book by its cover. But either way, you can contact us through www.veralytic, VERALYTIC, veralytic.com.
Perfect. And also put your link to your LinkedIn profile as well, because I think the thing I like about LinkedIn is that it really showcases someone as a person, as a professional. And then also all the links are probably in there too as well. So there's several different ways you can reach.
Steve and I both are very active in talking about the differences between the NAIC illustrations model silliness versus client's best interest. And again, that's not client's best interest, what I think is client's best interest, or what Steve thinks is, or what somebody else. It is we've been on a 200-year march toward client's best interest. It started with Harvard v. Armory over 200 years ago, and laws like ERISA and the Uniform Prudent Investor Act, they have all been steps in this march toward client's best interests. The march has never done an about face. It has gone at different paces over different times. Right now, it's moving into the insurance industry, but it's slowed down a little bit, but that's okay. It's never done an about face. So Steve and I both talk on LinkedIn a lot about the differences between the illustrations, model regulations, silliness versus what you need to know to serve your client's best interest.
I think this is why we're going to get along so well. And this is just the beginning of an amazing relationship, because you already know where I stand on this topic on the P&C world, on the independent agency, insurance agency distribution channel, where I stand on that. So guys, listen, we're going to have you on again. I know it. We are so grateful and honored to have you on. And anybody who's listening and watching today, you got to listen to these guys, because this is fascinating conversation, and hopefully it adds value to your life and into your business. And again, if you need to reach out to these guys and have a talk with them, we'll put all that contact information in the show notes. So looking forward to seeing all of you guys again soon on the Advisor's Edge podcast. We'll take care, guys.
Have a great weekend.
Thank you.